and welcome. You're watching Market Edge here on ET Now. I'm Harsaita, with me is Snaisha, and let's take you through the top headlines for today. Optimism around Iran talks lifted sentiment on the street, with the Nifty reclaiming the 24,500 mark. Easing geopolitical fears and softer crude supported risk appetite. Financials and autos led the move, while FMCG and real estate also saw strong traction.
On the earnings front, Nestlé India delivered a solid quarter four beat with double-digit volume growth, record domestic sales and margin expansion. Growth was led by broad-based demand, premiumization and higher ad-led market share gains.
All eyes on SBI Life, where premium growth is expected to remain steady, but profitability may come under pressure, with DNB and margins likely to moderate. Street focus will be on product mix, regular premium trends and management comment.
And all eyes on Trent, where a good set is expected, with revenue growth rebounding to a three-quarter high, supported by aggressive store additions. The street will watch whether growth can sustain amid cannibalization concerns. The board will also consider a potential first-ever bonus issue.
And all eyes on Tech M, with a mixed quarter expected. Flat constant currency growth, modest margin improvement and strong profit growth is being priced in. The street will focus on deal wins, BFSI recovery, AI monetization and the FY27 guidance.
Okay, and lots to cover on the show today. We have Ajit Mishra's top bet. He's going to be joining us to give us a better sense of the market on the technicals. And of course, Ajit will be here as always to take us through what the FNO snapshot has been. So lots to talk about in terms of what the show is going to cover, largely in terms of earnings, what to expect from the Nifty giants, SBI Life, Trent and Tech Mahindra as well in terms of their quarter four numbers. But with that, let's get started with the show and give you a roundup of what today's trading session has looked like. Nifty 50 up about 0.9%, looking very good, more than 200 points of an uptick coming in. And we've managed to sustain those 24,550 levels for the Nifty. Sensex too looking good, and now in fact we're once again very close to that 80,000 mark on the Sensex. 753 points higher for the Sensex, almost an 800 point uptick on Nifty Bank. That one was up about 1.5%, slightly lower than that. The India VIX has seen a very sharp cool off in Tuesday's trade, 6.7% lower, and the broader end also showed very good support in the overall market move. So looking very good in terms of the overall indices. But if you take a look at what the sectors did, barring Nifty Pharma, that has also closed with a tinge of red, you had everything else that closed in the green, led by Nifty FMCG, and Nestlé was one of the outperformers within that basket. Very robust set of numbers, performing better than even heightened expectations that the street was penciling in. And on the back of that, that stock was up about 8.5%, and very good show from there, leading the FMCG index higher by about 2.5%. HUL also did well. The rub-off impact was seen on some of the Nifty staples companies. You had Nifty Realty, Bank, Finance, Media, PSU Banks, Defense, IT, Auto, Energy and Metal. Metal absolutely flat. Managed to close in the green very nominally, but energy and auto have done well, and that's the way the markets have performed in terms of what the sector moves were. If you take a look at some of the stock specific action in the trading session, lots of action on the back of earnings updates. You had some positive news on companies like PNB Housing, Oberoi Realty, Zentech, all of them buzzing either on updates or earnings. And on the back of some brokerage reports, you had Anthem Biosciences that was in focus. Citi initiated a buy. Grow, Awas Finances, Gujarat Gas, all of them were in focus on the back of some brokerage news, on brokerage notes rather. And in terms of what the Nifty 500 gainers did, it was Elecon Engineering, Grow, PNB Housing, Lemon Tree that did well. But on the flip side, lots of pressure building in on something like a Canara HSBC, Ola, Natco, Eris Life Sciences, Sham Metallics. And we'll have Raghav will join us on the show in just a bit from now to give us some context in terms of what the news is for some of these names and why such an adverse reaction on them. But while we're talking about equity, let's also shift focus very quickly to the FNO universe and take it across to Sajid, who's waiting by with a snapshot of everything that's shaping up in the futures and options space. Sajid.
Thank you, Snehi. What a good afternoon coming in for the Nifty, with Nifty finally closing about the 24,500 mark. And if you look at the Nifty futures, it ended at nearly 9 points of premium to the spot, with open interest up nearly 0.5%. So some long positions getting added in today's trade, especially on the day when there is a Nifty options expiry. Now, Nifty Bank again saw some good move, 1.4% jump there. Though again, open interest up nearly 0.5% and ending on a premium of 3.5 to the spot. And the Nifty spot also, closing about the 57,370 mark as is at the end of the trade there. But long positions getting built up in private sector banks. You have HDFC Bank, ICICI and Axis, where we have seen long positions, where we have seen many of the PSU banks being active today with the short covering happening in Bank of India, with long buying happening in SBI, BOB seeing a long buy, and PNB is also seeing some short covering happening, except for Bandhan Bank, where we saw some kind of long unwind. It was almost a positive move for many of the banking stocks in the Nifty Bank there. Look at what call and put writers are doing. You have 24,500, which was the most active strike today, and that too of the next week expiry, which is there. And then you have there is the next other active was the 24,400 mark, which was in today's trade. So 25,000 is where the action has shifted for the call writers. And if you look at the distribution, it will give you an idea of next week's expiry, where 25,000 has a strong resistance build up, which is there, but with the support coming at 24,500 for the Nifty at this point in time. Futures gainers include stocks like Nestlé, up nearly 8%, PNG Housing up 8% on the back of good numbers, which is there. LIC is up 5%. Nestlé long buy, which is happening. PNB Housing, we have seen some short covering, and LIC also seeing some longs getting added into this trade. Futures losers include stocks like SBI Life, where there's a short shorts which have been added. Polycab is seeing some shorts getting added, and Sammaan Capital is seeing some long unwinding. Stocks down between 2 and 3.5% in today's trade. Option gainers include stocks like Tech Mahindra Bank or Vinda Pharma and PB Fintech, all seeing some long buyings happening with good amount of open interest happening between 13 to 15, 16% open interest happening, addition happening in these stocks. And option losers include IREDA, where there's a long unwinding. Motilal is seeing some shorts getting covered, and PNB also housing is also seeing shorts getting covered in today's trade there. So overall, we end this April 21 expiry on a positive note. And now it's all building up to the monthly expiry, which is on April 28th, with a good resistance coming in at 25,000, and put writers looking to consolidate their position and head towards 25,000. And in the next few days, you will see also the negotiations for the West Asia crisis happening. So the positions are going to be a little volatile. So just watch out for that.
For volatile positions. Thank you so much, Ajit, for bringing us that. Let me go across. We're joined by Ajit Mishra, Senior VP, Religare Broking, joining us. And of course, Ajit tracks technicals. Ajit, give us a sense. What are the levels you're tracking, especially for the day of trade on Wednesday?
Yeah, good evening, Harsh. And what we are seeing right now is the continuation of the move. Means we are in the third week where Nifty is gradually inching higher. The pace of advance is slightly on the back foot of late, considering that we were seeing mixed trend, especially in the heavyweights, and crude is also witnessing volatile swings from 86 to again to 95, $94 mark. So amid all this, we are anticipating that this recovery may strengthen further, and a possibility of a retest of long-term moving average around 24,800 mark seems high. So roughly around 200 points, something that we are away from that hurdle area. The support has also shifted from previously around 23,900 zone to 24,000, 24,200 area. So it's basically a buy on dip market. But yeah, stock selection becomes very important and critical. Today, the banking index did the trick. Basically, banking was facing pressure for almost like in a couple of trading sessions around the 100 EMA mark. So today we saw that decisive traction from the early trade, and that's the reason why we could see Nifty also witnessing a sustained up move amid the consolidation bias during the session. So banking looks comparatively better, means we have roughly around 57,800, 500 to 600 points more on the banking index from the current area. And the rest of the sectors like metal, energy, they are largely basically offering maximum opportunities on the stock specific front. So one should act accordingly. But yeah, the overall tone looks positive for both Nifty and banking index, wherein banking looks comparatively better.
Well, that is the sector bias. First of all, hi Ajit, and thanks for your time. Well, that is your sector bias. Talk to us about where the stock bias lays right now. Any stocks that are looking good to you right now?
Yeah, Sneha. So, considering the market tone, we may continue to see pause or breather every now and then. But largely, we are seeing that sectors or stocks which were sitting on the sidelines earlier, they have also started witnessing participation. So, LIC Housing Finance is one such name from the BS5 basket, wherein we are seeing fresh traction. Today, it was a very decisive session where the stock moved up sharply with very strong volume. So, this indicates this corrective trend that we were seeing in the stock has finally ended now, and 595 is what we are eyeing as a immediate target. So with stop at 548, one can go long in LIC Housing Finance, and then we have Muthoot Finance, which was hovering around its record highs, but it seems like that the consolidation is over now, and we are set for the next leg of the up move. So 3790 is what we are eyeing in Muthoot Finance with stop at 3520.
Okay, so those are the takes coming in from Ajit. Ajit, I wonder whether realty at all features, because the kind of move that we've seen on realty, at least over the last 20 days or so, seen a very strong move. What next?
So yes, in fact, Harsh, during the corrective phase also, we were seeing underperformance from realty, FMCG, and IT. So even the laggards are also witnessing a catch-up move. So which is a good thing, means, but for the realty, Nifty reality index, we are just 50, 60 points away from the long-term averages. So around 840 something that we are eyeing as a strong hurdle. We're currently at 800 mark. So there could be a possibility of consolidation or maybe some profit taking also. But some of these stocks like Prestige, Godrej Properties, DLF, they all are on strong footing. But once we reaches to this hurdle of 200 EMA, one may consider booking at least partial profits.
Okay, so that's on the Nifty Realty. Ajit, your view on the Nifty Defense Index. Some of the stocks have done very well. We also had my colleague Prakash who joined us with an exclusive earlier in talks about how Cochin Shipyard is now going to turn from a mini Ratna to a Navratna company, and some other defense names too are going to see some upgrades in terms of their ratings. Your view on some of the defense names and how attractive or not does that pack look to you?
So Sneha, in fact, 3 weeks ago, we were at the lower band of this, corrective phase in the defense index, which is the NIE defense. So it was close to around 7,400 mark. And in the last, just 3-4 weeks, we are again back to the record high. So it clearly shows that the recovery is broad-based. We are seeing all the counters participating in the move. And the kind of recovery, especially that we have witnessed in the top names, gives us the comfort that there would be more leg of up move once we see some consolidation around the record highs. So one can continue to stay put for fresh buying, BEL, HAL, Data Pattern, Majgaon Dock. These are some of the names wherein we see relatively high strength. And in fact, one can look for ETF approach also in case if somebody is looking for a basket kind of approach. So then MO Defense, the Motilal Defense ETF is something also that one can consider accumulating at current levels, with 8,200 being the stop loss area for defense index.
Okay, let me go across to Raga. We're standing by with all of the stocks that have buzzed, in fact, in the day of trade on Tuesday. Raga, what's on your list?
Well, absolutely, Harsh. The markets pumped up at least 750 points in the trading session today. Certain stocks that remained in news were PNB Housing, which was 8% up on the back of good results. Their yields have moderated to 9.47% in Q4 FY26. The cost of borrowing has also improved to 7.35% in Q4 FY26. The retail disbursement has clocked an all-time high of INR 9,000 crores, and it has also there's been an improvement in the asset quality as well, and the revised corporate segment is standing at about INR 335 crores in terms of disbursements during Q4 FY26. Another stock that was in news was Nestlé, which was 5.5% up. The net profits for that are at 1,114 crores versus 885 crores, up 25.9%. Revenues are up 22.6%. Volume growth is in double digit for Nestlé, and the domestic sales are up 23.1% on a YOY basis for them, and hence the stock reacted positively. Zentech was also up 6.5%. The recent announcement on the company receiving company's arm receiving manufacturing license from the Government of India for Canon's executive has it has targeted a 4,000 crore across 2 years for their revenue, and that's a big win for that particular company, and hence the stock has reacted. Lemon Tree was up 7%, adding a new hotel chain in Gujarat, and 32 new properties in Gujarat are coming up, and hence the stock reacted. Grow was also up 7%. In the previous trading session, we got their results out. The stock did not perform well previously in the previous trading session, but today it was up 7%. The profits have jumped to 122% to rupees 686 crores. The revenues have also surged to 88% for them. SML Mahindra stock was down in today's trading session about 6.5%. EBITDA margins have reduced by 170 basis points. EBITDA went down 0.1% for them on a year-on-year basis, even though revenue for them has grown to 16.4%. Indo Solar was down about 4.5%. Their revenues have declined by 57% YOY basis. EBITDA margins have tripled for them. Headwinds on the back of significant insolvency-led restructuring and takeover by Vari Engineering was impacting the larger image of the stock at this particular point in time. Iris Life Sciences, again another stock which was down 4.5%. There have been inspections on their Swiss units 1 and 2 situated in Ahmedabad and Gujarat, and that is impacting the stock. These were the stocks in news at the moment.
Okay, Raghav, thanks so much for taking us through that. So a bunch of stocks, a lot of the pharma names that were in focus. You also had some of the earnings reaction seen on something like an Indo Solar that was down. SML Mahindra was down in trade. So some of the earnings reaction over there, and Zentech buzzing on the back of an order with, in fact, Indo Solar since the beginning was locked in lower circuit of 5% and continue to be so for the entire trading session. So those were some of the stocks that were in focus. And other than that, if I take a look at some of the top buzzers from some of the sectors that have not done very well. Yes, they've closed in the green, but I'm talking about something like a Nifty Metal that has barely closed in the green, along with a Nifty Energy, Nifty Auto. Some of those names from the auto basket, you had Eicher, Hero Motor, TVS Motors that were under pressure. Ajit, any reading on the charts for some of these names from the auto sector, and by when, in your opinion, on the charts at least, will the auto sector start picking up some speed now?
So yes, it's been almost like 2 weeks now that we are seeing a very tight consolidation in most of these auto counters. But it's basically a healthy, pause or consolidation that we are seeing in auto index. And once, let's say, we surpass this 27,000 mark, we are currently at 26,600 levels in the Nifty Auto. So once we surpass this level, there'll be a possibility of next leg of the up move. So stocks like Eicher, M&M, TVS, Bajaj Auto, all are witnessing a buying pivot formation. So that overall tone looks positive, but for the momentum, we need this break above 27,000 mark, and then probably the auto index might also inch towards record highs, which is around 28,000 plus soon.
Ajit, give us a sense. How do you expect IT to react on the day of trade on Wednesday? You'll have earnings of HCL Tech and Persistent, and those reactions will come through.
True. In fact, if you see that, of late, the IT index or the IT majors, they have also witnessed a decent rebound, but relatively the strength is missing. Means we are still seeing pressure emerging on every uptake. And today, though we were seeing that some of the IT counters ended on a strong footing, HCL looks comparatively better within the large cap IT names, wherein even prior to the corrective trend also, HCL Tech was among the names which were very close to its record highs. So now after this consolidation, we believe that once the stock surpasses this 1550, 1560 barrier, probably we may see a next leg of the move also. So the relative strength is there, but we have resistance around this 50 to 100 points away from the current area. So which might cap the upside, but overall, from the medium to long perspective, we still feel that HCL is a better bet within the large cap IT name. Persistent, on the other hand, we still have multiple resistance to cross. Here in the mid-cap IT space, definitely it's outperforming, and 56,000, 5600, 5650 is the area basically where we have the next resistance. So in case if it retests that zone, probably one should look to book profits if the view is short term, and let this stock stabilize above 5650 mark to re-enter the trade.
Okay, so that's on some of the stocks from the IT space. Ajit, on that note, we'll let you go. Thanks so much for taking the time out and sharing your view on the market and some of the sectors with us. Thanks so much.
Thank you.
Thank you. Okay, viewers, on that note, time to slip into a very short break. So far, we've covered everything that we saw on the trading session of Tuesday. But more importantly, Harsh, when we come back, we're going to be taking a look at everything you need to be keeping out on your radar in terms of earnings, some cues globally as well as back home for Wednesday's trading session. All of this and much more when we return on the other side of this very short break. Back with Market Edge, and as promised before the break, let's take a quick look at everything that you need to be keeping out on your radar to prepare yourself for Wednesday's trading session. Let's take it across to Meryl for that.
Yes, here's a few important cues to watch on the 22nd of April. Starting with India, the markets will be tracking headlines around the India-US trade deal, with reports suggesting that both sides are nearing a bilateral trade agreement, which could be the key sentiment driver for the markets. Globally, UK markets will be watching the CPI inflation data, which is to be released, while investors watch out for consumer confidence data from the Eurozone. In Japan, the March trade data remains in focus. And on the global earnings front, we've got heavyweights such as Tesla, IBM, Boeing, GE Vernova, AT&T, as well as Moody's set to report the results. And back home as well, it's quite an earnings-heavy day. We've got from the Nifty pack names to watch, including Tech Mahindra, SBI Life, and Trent, while other major names include Havells, L&T Tech Services, SBI Cards, Tata Communications, OFSS, as well as Bharat Coking Coal. Finally, we've also got some geopolitical events on the radar. Trump has said that he will not be extending the ceasefire if an Iran deal is not finalized by the 22nd of April. And we're also going to be watching on key central bank commentary with ECB President Christine Lagarde as well as BOE Deputy Governor Sarah Breeden scheduled to speak on the day. So yes, quite a few important events to watch out for on the 22nd of April.
Okay, thank you so much for that, Meryl. Now, in terms of key, the key way to play this market, or how do you view the macros among everything that's happening geopolitically, the uncertainty, the volatility in markets, how do you play it? What sector is Nilkant Mishra looking at? He's, of course, needs no introduction, Chief Economist, Axis Bank, and Head Global Research at Axis Capital. What's he betting on? Listen in.
If the energy disruptions, the Strait of Hormuz does open up, as President Trump is promising to in the next couple of days, then I would say that we are mostly back to where we were before the war, with the change that the energy mix, the priorities will change. I think power sector looks much more attractive than it was. We have credit growth. I think that's actually remaining quite strong. And I hope that some of the liquidity issues that were plaguing us will start to get addressed. I think the real estate market still looks quite attractive. So those are the sectors that you would remain quite constructive on.
Okay, that's the word coming in from Nilkant Mishra. But let's refocus to everything to be watching out for in Wednesday's trading session in terms of earnings. And three Nifty earnings, SBI Life, Tech Mahindra, as well as Trent. Let's start by breaking down the expectations of all of those one at a time. And SBI Life, let's start by looking at that first. The annual premium equivalent is expected to grow on a year-on-year basis. VNB is expected to slip 4%. Mitali is joining us to tell us what the street is penciling in.
Right, so SBI Life, it is expected to report a mixed quarter for Q4 FY26 earnings, with growth slowing and also profitability seeming to be under pressure for the company. The AP, or the annual premium equivalent, it is expected to rise up around 6%, which is actually a top-line momentum indicator. While if you see on a sequential basis, APE could actually see a decline of over 32%, reflecting a softer quarter for SBI Life. Now, talking about the value of new business, which is the VNB, it is likely to dip 4% on a yearly basis, while it could see a sharp dip of around 32% on a quarterly basis. Now, this actually signals the pressure on the quality of growth for the company. Margins are also expected to compress. VNB margins may come in at around 27.6%, which is actually a fall of around 290 basis points on a yearly basis, while nearly 390 basis points downfall on a sequential basis, pointing to an adverse shift in the product mix and also potential impact from the recent taxation changes. Now, investors should keep an eye out on the management's guidance on the APE growth going forward, also the share of high margin regular premium products. Thirdly, how effectively the company mitigates the impact of the recent taxation changes, and also any strategic shift in the product mix to defend the margins that is announced by the management. So overall, a steady quarter in terms of growth for SBI Life, but profitability, that remains the key concern for quarter 4 for SBI Life.
Mitali, thanks for taking us through that. So that's everything to watch out for, as well as the pain points to be watching out for when it comes to SBI Life. But let's talk about the second big earnings to track in from the Nifty 50 group, and that's Trent. Trent also is expected to show a very good set of numbers this time. Management in their quarter 4 update had guided for revenue of 4,937 crores. The street is expecting revenue to be slightly lesser than that. That's the consensus poll. So at least the management indication is looking good. EBITDA is expected to grow by 22.5%, net profit up 7.5%. And what looks really good is the margin trajectory. We're expecting to see that number at 16.5% versus 16, up 50 bips on a year-on-year basis. Store expansion looking solid for quarter 4, 22 stores added in Westside, 109 in Zudio. And in fact, when we're talking about the revenue update, the management has indicated a 23% uptick in revenue in quarter 4 on a year-on-year basis. And this is the highest in the last 3 quarters. So if this number actually ends up coming through for Trent, this is going to be a very good turn of events for Trent's revenue trajectory that has consistently been falling since quarter 3 of FY25. For the overall FY26, they have guided revenue growth of 18% in line with street estimates, but this is lower than their initial guidance that they had given at the start of the year of 25%, and that has been missed. So basis this, all eyes are going to be when their earnings come out on the fact if they are going to maintain their guidance for FY27 or if that is trimmed. Same-store sales growth is also going to be on a radar, and other than all of that, everything else that you need to be watching out for in terms of Trent's earnings is the bonus issue that the company has said that it will announce with the earnings. If approved by shareholders and the exchanges, this is going to be the first bonus issue since its listing in 2004. ESOP plan, interim dividend and fundraising via rights issue is also on the radar for the company. So watch out for all of this for Trent. But overall, Harsh, largely good set of numbers expected.
Okay, that's on Trent. And from Trent to Tech Mahindra, Darshita here with what to expect with regard to that one.
So heading into this quarter for Tech Mahindra, the setup looks fairly steady. Starting with the top line, the street is expecting a largely flattish growth sequentially, with the dollar revenue slightly soft on a QOQ basis. That said, in the rupee terms, there's still some resilience coming through. Now, what's interesting is on the margin side, where the EBIT is expected to rise at about 6% sequentially, and the margins expanding to nearly 13.5%, reflecting continued cost discipline. Consequently, PAT could see a sharp 35% increase on a QOQ basis, partly supported by a lower base. That said, a few key monitorables which will continue to be into focus is the recovery in BFSI post the fall-off impact, traction in the Europe auto segment, and any potential margin headwinds in Q4. Looking ahead, management commentary will be crucial, especially around the FY27 growth outlook, deal conversion trends, and AI-led demand momentum. Importantly, the company continues to maintain the stance of delivering growth above peers and the margins around the 15% mark, with communications and Europe being the key growth drivers. So overall, while the quarter is likely to be margin-led, a meaningful pickup in the demand is something the street will closely watch out for.
So much for that, Darshita. Completely timed out on this edition of Market Edge, viewers, but hopefully this gives you a good lens into the trading session on Wednesday to set you up for that. For the moment, it's a goodbye from Snehi, myself, and everyone who puts this show together. Thanks so much for watching.